I do want to give you this tip if you are facing an audit right now. Only give the IRS what's asked for, and the support for those records should be readily available. I've had people that were asked to show income for different years. Instead of preparing financial statements, because they hadn't kept up with bookkeeping, so the things on returns were guesstimate, they rightfully so should have been audited. They gave the IRS complete bank statements for 12 months. Well, guess what? If the IRS is given the opportunity to dig into something, if you're going to throw them an alley-oop, they're going to dunk it. And they said, well, this is what they asked for. And I said, no, that's actually not what they asked for. And even if they had financial statements to show the income, if the IRS had asked for the bank statements, I would have given them bank statements with the expenses, the debits redacted.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, welcome to episode 44. Today, we're going to talk about audits. All right. When I talk to people that owe the IRS and I'm like, hey, what happened in your life that caused you not to file tax returns for so many years? It's crazy the amount of people that tell me either one, they faced an audit with the IRS and it scared them half to death, or two, they have this crippling fear of facing an audit because someone they know faced one and now they just haven't filed returns. Well, friends, that is the absolute wrong approach to take because guess what? You may not face an audit, but you're going to have a snowball of tax debt when you do start filing. But that's not what this episode's about. Episode 44, we're going to talk about your business and is your business audit ready? In today's episode, we're going to talk about what an audit actually is because no, contrary to popular belief, receiving an audit or receiving a letter from the IRS is not an audit. Okay. We're going to talk about your real chances of actually being audited. And then we're going to talk about the best thing that you can do to make sure that your business is audit ready. All right. So let's get right into it. First and foremost, there is no such thing as an audit-proof return. What does that mean? I see tax professionals advertising that if you work with them, there's no chance that your return could be audited, but that's just not true. And here's the reason why. There are different audits and the selection for those different types of audits are going to vary. All right. So the IRS has something called the DIF, DIF. It is the Discrimination Function System, and it's going to rate the potential for change based on past IRS experiences with similar returns. What does that mean? It means that the IRS has a way to track returns that are the same using, for businesses, things like the NAICS. You know, that little code, if you file a Schedule C, is going to be in the top right, and the code is going to align with the type of industry you're in. Or if you file a corporate return or an S-Corp return, same thing, that NAICS code is there. Well, each year they can track the returns for a particular industry and they can kind of gauge what are the different averages for if this person has this amount of income, what type of expenses, credits, and all of that type of thing would they have, right? So if your DIF score is off, that might be something that triggers an audit. All right. Then, of course, we have the irregularities with maybe you have all round numbers on your return. Now, I'm not saying that if your expenses or your income actually are round numbers, they all end in zero. I'm not telling you to change them. Okay. Please don't do that. Please only put accurate information on the return. But if your return's not passing the sniff test, that could be a reason for you receiving audit correspondence. Then we have snitches. All right. The IRS has the whistleblower program where they do actually pay snitches that were right about what they were snitching about. That's a real thing. So just because your business is being audited doesn't mean that you did anything wrong. Okay? For 2023, there was a 0.4% chance that taxpayers would face an audit. Now, of course, for low income individuals, that was a bit higher, and that's been all in the news. We're trying to change that by funding the IRS. But the reality is, across the board, is a 0.4% chance that your return would be audited in 2023. So when we look at what an audit is, people make it seem a lot scarier than what the IRS defines it as. An audit is simply a review or exam of your tax account and your financial information to ensure there's proper reporting. So for those of you who have good records, for those of you that don't inflate or deflate any income or expenses on your tax return, what do you really have to be worried about? You have all the information there. You just have to be able to give that to the IRS in a way that they can see that you are fulfilling your reporting requirements and you are doing it accurately. Now, for those of you with horrible records and you guesstimate when you get your taxes filed, or you have a preparer that guesstimates for you, you, my friend, may be in trouble. So when we're looking at this, we have correspondence audits where the IRS will reach out to you as the taxpayer and they'll request certain information. If you are in this situation right now and you have received an audit notice, I don't really care how well your records are. You guys know I always say that I won't judge your tax competency. I'm here to fill the tax literacy gap one taxpayer at a time to inform you of these things. However, if you're facing an audit, correspondence audit, in the field audit where they come to you, I highly recommend that you do not handle this alone. And here's why. You can get on YouTube right now and you can see how to place an arm back after it's been broken. However, you don't have experience doing that. You haven't gone to school to learn how to do that. If you broke your own arm, you would not think you were the best person to put that back in place and to give it the proper care so it could heal correctly. Now, could you potentially do it? Could it heal? Maybe. It's going to be the same thing with your business being audited. You need somebody that has the experience and the expertise with dealing with the IRS. If that's you right now, you can book a tax relief consultation with me at bowenstaxsolutions.com. If you just like me for free information, that's cool too. You can check out an episode where I talk about what you need to look for when finding a tax professional. Because here's the thing. Ultimately, my mission is to fill the tax literacy gap, and it doesn't have to be me, but you do need to make sure that you get the help that you need. All right. However, I do encourage you to book the call to see if you are a good fit to work with me. Once you get this correspondence audit, the IRS is going to ask you for information. They may not tell you why. These can cause people to go into analysis paralysis and think about all of the bad things that could possibly happen. You need to make sure that you get the IRS what they need in a timely manner, often before your deadline. That way, if anything else comes up, you can respond again within a timely manner. This is easier for my folks that have good records, okay? Now, if you already have a tax power of attorney, all right, so somebody that's filled out a 2848 and they can speak to the IRS on your behalf, they are also getting the correspondence for this audit. One mistake that I see taxpayers make is assuming that whoever prepared their tax return is also receiving any correspondence that they are receiving. This is inaccurate unless your tax professional that prepared your return is also your tax representative, which means you have a 2848 on file with both your information and their information. Okay? Because we know that these audits can be at random, the best thing that you can do is to prepare. All right. So how do we prepare? I'm going to keep harping on this today. It all is going to boil down to record keeping. You need to make sure that you are able to substantiate everything you claim on your tax return. Yes, both income and expenses and credits. Because some people say, well, why do I need proof of income? Anybody heard of PPP loan fraud where people inflated their income to be able to get a bigger PPP loan? There's also different things like SBA loan fraud. There's mortgage fraud where people inflate their income there. So there will be times that your income is called into question. If you don't have things like a 1099 to show that you made that income, that's absolutely fine if you have good record keeping, which will be bookkeeping. If you have financial statements to show that you actually made that money, that is going to be perfect, because a good accountant and bookkeeper will not just create financial statements based off what you told them. They are going to actually reconcile your bank accounts, and the information on the financial sheets should reflect what went through the bank account. All right. If you have a bookkeeper who's preparing your financials and they've never seen bank statements, never had access to your bank account, you need to run from that person, because they are doing a plug and play to put numbers in that fit the goal that you want. Okay. I've worked with people, and when I was looking at tax returns, I was like, hey, what happened? These numbers are fluctuating funny. They were like, well, hey, this year we needed a loan, so we went and had our books prepared so we could get the loan. And I'm like, well, your financials don't match your bank statements. And what happened is the person that knew that they were going for the loan wanted to be able to prove that they could qualify for the loan and they would have the ability to pay it back. So they fabricated numbers to show income that did not match what was actually going through the bank account. So we had a whole storm of problems there, right? So your income statement, the income should always match what is actually going into the account. Your expenses, same thing. This is why we urge you all not to commingle your expenses, because if you're facing an audit and the IRS has requested your bank statements, are you going to be able to account for all those different Amazon purchases? Because chances are they're likely going to be considered personal. All the Walmart, Target. Now you can get things for your business from Walmart and Target. Absolutely, right? They have electronic departments. They have little office departments. But if you don't keep your receipts to be able to substantiate that expense, how are you going to do that and prove that you had the right to claim what you claimed on your tax return? Now, like I said, the best practice for record keeping is bookkeeping. Something, again, if you have a viable business, that is best outsourced. And no, I don't have any affiliate money I'm getting from saying that, and I don't do bookkeeping. But if you were amazing at what you do, you were wasting your time doing your own bookkeeping. Now, does that mean that you can't do bookkeeping, that you don't understand it, that you shouldn't understand it? No. You should understand what your financial statements are saying. I'm saying that you shouldn't prepare them for yourself on your own, because you could spend that time making more money in your business. So there are 3 H's that we're going to take a look at with record keeping. How long do you keep your records? How do you store your records? Nobody's accountant wants a shoebox of receipts, okay? And then how do you deliver your records? Because when we think about how we store and deliver them, we are either creating a paper trail physical or electronically. Now, I'm going to give you those 3 H's to think about and consider. I'm not going to deep dive into them because, I try to keep these at 15 minutes, but I did an episode all about record keeping. is actually episode 20, and I talk about how long to keep tax records. So if you have any questions about that, be sure you go back and check that episode out. Because the IRS has more funding and because we have more people training to become auditors, I do want to give you this tip if you are facing an audit right now. Only give the IRS what's asked for, and the support for those records should be readily available. This is what I mean. I've had people that were asked to show income for different years. Instead of preparing financial statements, because they hadn't kept up with bookkeeping, so the things on returns were guesstimate, they rightfully so should have been audited, they gave the IRS complete bank statements for 12 months for 3 different accounts. Well, guess what? If the IRS is given the opportunity to dig into something, yes, they're underfunded as of now. Yes, they're understaffed. But if you're going to throw them an alley-oop, they're going to dunk it. Because guess what? When we have people that don't keep up with bookkeeping, they usually also commingle. So because they didn't just give them the income information, they gave the IRS access to everything they spent money on. And how many of their expenses do you think they were actually able to substantiate? They had all kinds of crazy debit amounts shown in these bank statements. And they said, well, this is what they asked for. And I said, no, that's actually not what they asked for. And even if they had financial statements to show the income, if the IRS had asked for the bank statements, I would have given them bank statements with the expenses, the debits, redacted, right? Blacked out, because that's not actually what they asked for. They only asked for the income. So sometimes by not being prepared, by not having good record keeping, and essentially, really being kind of lazy because they didn't go out and just pull the income out themselves, they opened a whole new can of worms for themselves. And the IRS actually ended up making more adjustments than what they initially were going to propose. Now, you may be thinking, now why in the world did you let your client do all that? Because they weren't my client yet. But that's just something where I see well-intended people mess up with the IRS because you don't know. And again, that just goes to show you you're phenomenal at what you do, but let us as tax professionals that do representation work be phenomenal at what we do. Now, if you are confused between what, tax preparation is and tax representation, I do have another podcast episode that covers tax representation, because you may also be thinking, well, why did their tax preparer prepare a return with expenses they couldn't substantiate? It's because not all tax professionals are the same. Yes, they should have done their due diligence, and because they helped get them in this pickle, yes, they should have helped them. But they didn't, because their tax professional that prepared the return was not familiar with representation work and being there for them with an audit. But not only that, they also weren't credentialed to do so. So it does make a difference what tax professional you work with. So we are headed into 2024. Tax season is right around the corner. As you are preparing things for the next filing season, ask yourself, are we audit ready? Do we have good records? How long are we supposed to keep these? How are we storing these? How are we sharing these with our tax professional? Are they asking us anything about the records that we're giving them, right? But if you found this informative, I want you to do me a favor, all right? I want you to share this podcast with your network of business owners. If you are facing an audit right now, or you have a notice that you don't want to turn into a correspondence audit, you don't want it to turn into a correspondence audit, you can book a consultation with me at bowenstaxsolutions.com. It will be a tax relief consultation. All right. During that hour, my time is devoted to you. I'll send you some questions before we meet so that I make sure I have all the information that I need. And you can take that information that we discuss on our call, the roadmap, And if you feel good to handle it yourself, you can go ahead and do that. Like I said, with an audit, I strongly advise you do get help. Or if we're not a good fit to work with each other, I can give you a recommendation for someone else. Now, because I know that I have tax friends listening to this as well, if audits are something that you want to be able to help taxpayers with, I strongly encourage you to go to americasfavoriteea.com and join my community, the Tax Pros Representation Journey, where each week I give you a private podcast to help you help taxpayers with their issues, and also an article and community. And guys, remember, you've listened to this episode. Don't get frozen in your tracks, because back taxes shouldn't ruin your life. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.